Hey guys, what's up? Alec back with the daily stock market, and today what we're going to be talking about is the 10 best stocks to have on your watch list this week and throughout the rest of the month. And we did just hit a big milestone, guys. We're at $25,000 in the public account, the Robinhood account. So after that, we have 30,000, 40,000, and 50,000 is the main goal right now. In the last 3 months, we're up $6,000 just on this one account. We also have buying power of 6,300 right now. So technically, I only have $19,000 invested, and I'm up $6,000 on 19,000. So let's get right into the video because we have 10 great stocks to talk about right now, and I want to tell you my thoughts behind these stocks too. Okay, so the first one we're going to be talking about is going to be Snapchat. It's at $53 a share currently, up 4% in the last week, up 3.2% in the last month, and up 24% in the last 3 months. So it's a nice gainer, especially if you look at the last year. It's up 171%. It was all the way down to $8 at one point. So definitely don't be sleeping on Snapchat. Now, in my opinion, I'm going to probably be buying this one right around $48 to $47 a share. I think it can get that low. It can maybe even get as low as $45 again. So if it does get that low, do not pass up the opportunity if it does go for $45 a share, because this is a great long-term opportunity. With a market cap of $76 billion, this market cap is extremely large, but I think there is still room to grow. If you're interested in this stock, I would recommend reading both of these articles, especially this one here, Snap Turning Virtual Reality into Real Money, Heard on Wall Street. If you still think of Snapchat as a niche platform for the world's youth to send one another fleeting selfies, think again. Snap Inc. is expanding into promising new direction. So we're not going to read this whole article today, but if you want to pause the video and kind of read through it and look through it, or even go on yourself, whenever you see me look at an article, all you have to do is type in the headline. So go to Google, type in Snap Turning Virtual Reality into Real Money, Heard on Wall Street. And it'll be one of the first articles from the Wall Street Journal. So just dive into it. This is probably like a 5-minute read. If you're a slow reader, it might take like 7 or 8 minutes. So one easy thing you can do to instantly improve your stock market game is going to start, instead of just reading the headlines, read the full articles. Take the 5 minutes, take the 10 minutes, read a few articles. It goes a long way. So Snapchat right at about $47, $48, even maybe $45. I'd love to be picking up right around that price point. Now, the next one on the list I want to talk about, because we haven't talked about it for a while on the channel, and it's getting a lot of hype. Ticker symbol PLTR, up 25% on Friday, guys. So it absolutely exploded, and it was doing nothing for quite a long time, for almost a whole month. As you can see, from December 29th to January 21st, it only moved about 5%. And remember, this is a stock that has a lot of hype around it too. The reason why I seen this go up 25% on Friday, and we'll probably see it continue to go up a little bit more too, is because on January 26th, they're going to be doing Demo Day, which is going to be showcasing some of their new stuff. And remember, this is a data company, and one thing I really like about them is they have a bunch of partnerships. They're even partnership with Ferrari. And this stock is a little bit more controversial, and it's ran by Peter Thiel, which, if you don't know who that is, he was actually one of the founders of PayPal along with Elon Musk. Now, I would recommend at least reading these two articles. Why the stock's trading higher today, and you can kind of go through it, even pause the video if you want, read through the article. These articles are super short right now too, and you'll actually see trading up 15% this week at $30. The stock has a 52-week high of $33 and a 52-week low of $8.90. Expanded into various commercial markets with its Foundry software platform in 2016, with the intent of becoming the data operating system for companies and industries. So overall, you do want to play this one according to Demo Day. And like the other ones we've seen in the past, like Neo Day and Battery Day for Tesla, those information days are always a big catalyst of the stock running up a lot more. But what you might want to be careful is it's already pricing in the news. So it already ran up 25% in one day, which is a lot for a stock to be running up for. So if I could be buying in at about $26 a share, or right where it was on Friday at about $25 a share, I'd love to see that happen. I don't know if it will, so you might want to be careful with this one. Definitely do your own research because there is a lot of hype surrounding this one, controversy. And if you don't know who Peter Thiel is, you might want to look into him also. Okay, so the third one we have to talk about is going to be ACB, which is Aurora Cannabis. And they're going to be a cannabis company, obviously, and they're down 12% in the last week. And they're still up 13% in the month, but they were all the way at $12 at one point. And I think they will be going to $12 again. It's just why they're on the list. And this is going to be a great long-term hold, keep in mind. Joe Biden is very cannabis friendly. And I think that this one can be a great cannabis stock. And I'll probably make a whole cannabis video later on. So if that is something you want to see, there is a lot of great companies out. And over the next 4 years with Joe Biden in office, I think the whole cannabis industry is going to grow phenomenally. And what you'll see is a year ago, Aurora was all the way at $110. And right now it's at $10. So you definitely want to be super careful with this one. It's been very up and down. It goes all the way up to $17 and then pulls back all the way to $4. It shoots up to $12 and then pulls back up to $7. So with this one, whenever there's a big spike like that, be prepared for a little bit of a pull down for at least a few weeks. So with that being said, I think this downtrend can continue a little bit longer, and I think it can even go as low as $9 a share. If you can get in at $8 a share, that would be awesome for long term, or even back where it was in November 17th, $7.20. That's an awesome support, and I would love to be setting my price alerts for that. But I think more recently, you'll probably be seeing it only going down to the support of $8.40. So I would say right around the $7, $8, even $9 mark if you even want to swing trade this one. It does have some great swing trade potential, but mainly this is going to be a long-term hold throughout Joe Biden's presidency. All right, so the next one we have to talk about is DKNG. We haven't talked about them in a while, so ticker symbol DKNG. And in the last week, they're down 2%. Last month, they're down 3%. And the last 3 months, they're up almost a quarter, 25%. So that's awesome gains that they've had in the last 3 months. They were all the way down at $35 at one point. There has been some good news around this one. For example, what was it? Michigan started legalizing online gambling. New York started legalizing like apps where you can actually bet online gambling and doing it through your phone, so you don't actually have to go in and sports bet. Because some places require you to be in a casino, and some states, I should say, you can actually do it through a mobile device. So more people are turning into that. Remember, it's a growing industry still. Sports betting is not capped out by any means. So I think that this can be a great long-term hold too. Or you can even treat it as a swing trade, is why I like the companies that you can treat it as both long-term or swing trade. Remember, this market cap is $40 billion, so it's a huge, huge company. Not only will you be able to do sports betting and sports gambling, but you'll also be able to do it online in the future, my prediction. So I think that this is going to be a great long-term hold, better than anything else. The bottom support is right around $45. I would say anything under $50. If you can grab this one up, right around $49 or $48, put your price alert for, and then just hold it for long term. Because the all-time high on this one's 63. I think it personally can go to an all-time high again. It might take 6 months or 12 months, but I think it could even pass all-time highs in the future too. Okay, so let's talk about GM. They're at $55 a share currently, and the last month, they're up 31%, guys, in 1 month. This stock is absolutely on fire right now, and that's pretty much on the back of the news of the electrification of their cars. They're supposedly going to be a huge player in the electric car space, and they're making that a big focus moving forward on their business model too. So in the last 3 months, they're up 52%, which is absolutely bonkers for a company like GM to be up that much. If you see in the last 5 years, they moved 10% from April 2016 to January 2020. They only moved 13. And now in the last 3 months, they're up 52%. And the last 1 month, they're up 31%. So there's a lot of hype around this stock right now. In my opinion, I think that this one can get as low as $45 a share. So in my opinion, I'd love to be buying in at $46 or $47 if you are looking to swing trade or short-term results on this one. And in their previous history, they go up and down a lot, up, down, and recently it's just been up. So I think they're pretty much due for a move downwards. There has been so much hype around this stock though, so we might not get that downward momentum. And if you plan on holding this stock, GM, for a long time, let's say over the next 2, 3, 4, 5 years, you can buy at market. You can buy at $55 a share if you plan on holding for a long time, because I think in 2, 3 years, 4 years from now, even 5 years, they're going to have a big grasp on the electric vehicle market, and it's definitely a stock you don't want to overlook. Okay, so Volkswagen's going to be the next one, ticker symbol VWAGY. And look at how much they go up and down. This can be a great swing trade. Right now, they're really just going up too, is what you always want to look for too, an upward momentum pattern. Just like how you see right here through April and January, that nice upward. Yeah, you have your highs and your peaks and valleys and your highs and lows, which is great for swing trade. But overall, you want that direction going upward. Now, for as long as they've been around, they are a newer company. They listed in 2018 and haven't done much since. But in the last 3 months is really where most of their growth has taken place. They're up 28% in the last 3 months. And why they're on the list is they're also big on electrification of vehicles too. And they have a PE ratio of 23, market cap of 100 billion. So they're still a huge company that can be doing big things in the electric vehicle space. You'll even see Volkswagen CEO to now compete with Elon Musk on Twitter warns of grabbing some market shares from Tesla. So what you'll see, he even said, "Hello, Twitter. I'm here to make an impact with Volkswagen, especially on political issues, and of course to get some of your market shares. Elon Musk, after all, our ID3 and e-tron have won the first markets in Europe. Looking forward to it." So his comment assumes significant as Volkswagen outpaced for Tesla sales in some key European markets such as Norway. So if you want to read more about that, you can click on the link. You can type in this headline, this article, Tesla loses top spot to Volkswagen in Norway EV sales. So feel free to kind of read through some of this on your own time. But overall, I think Volkswagen's a great one to get into for long term. And I would want to be buying right around $18 a share. I know they were all the way down to like $15 at one point. I don't know if they'll go that low again, but if they do, you definitely don't want to pass it up. Overall, I would say $18 to $19 a share is a great place to put a price alert, especially if you're going to be holding this one for the next 2, 3, 4, even 5 years down the road too. Now, staying in the EV sector, what you'll see is Workhorse is the next one on the list. They're up 3% in the last month. They had a great swing trade potential right here, which we were talking about, and a lot of people on our course made a lot of money on this 40% gain on Workhorse. Now, as you can see, they're a good swing trade. I like to swing trade them very frequently, and they're getting to that point, right, almost ready for a swing trade. I would say if you can buy right around $21, that'd be the ideal mark. You can start even buying some shares at $23, but I wouldn't put a lot of money in. For example, I'd put in like $50 right now if it was me. And then if it goes down to $21 a share, I put in like $100 or $150. And if it goes down like $19 a share, right at the support, then you would want to be loading up a little bit more for a nice swing trade. Because as you can see, this one always pops back up to like $28, $27, $26 is very realistic for the stock to be at all the time. It's also a good long-term trade. So if you don't want to just swing trade it and you want to just hold it for a little bit longer, that's fine too. But honestly, I do like this one for swing trade potential. Okay, so the next one's going to be AMD, ticker symbol. And this one's up 3% in the week. It's only up 1% in the month. There was a good swing trade opportunity. It wasn't the best thing in the world. It was only 7%. But then look at this fall they had, a 9% fall. So that would have been the time to be buying in right around the $90 mark, the 80-something dollar mark. But as you can see, there has been some good swing trade opportunities here in the last 3 months. Now, in the last year, they are up about 77%. And honestly, if I was buying this one, I would want to at least be buying at $88 a share. Otherwise, for me personally, it's not worth it to put my money in AMD unless they're at $88 a share. And I would want to be buying at like $86 or $85 ideally. They have a P ratio of 128, market cap of 100 billion. And they have some interesting articles, with Intel. This was a good one that you guys can read. AMD earnings. If Intel gets its act together, can AMD maintain swollen valuation? So it's basically saying that if Intel gets its act together and comes back to being such a big player like they were before, it could cut into some of AMD's profits and AMD's market shares. It can take some of those clienteles away, and the market cap could shrink, or it can even go back down. So this is one that can actually go back down to $75 potentially if Intel steps its game up. If you believe strongly in Intel, then you might want to put your price alert closer to about $75 or $85 on AMD. All right, for the second to last one, we're going to be talking about Disney stock, and we won't spend too much time because I know we talk about Disney stock all the time. They've been shooting up, going down, making highs, making lows. In the last 3 months, they're up 36%. We know they've absolutely taken off in the last 3 months, and in the last year, they're up only 22%. So remember, they were at $141, and they fell as low as $102 at one point. They've been making a steady increase. They were up about 25 to 30% from April 1st to October 31st. And if you go back even further than that, like March 20th, they were up 37%. So just recently is where they really stepped up, about 50% gain from October 29th to December 31st in a very short amount of time. And that's because their Disney Plus subscription-based model is catching on. Just like Netflix, they're getting monthly subscribers and they're charging them every month. And they have a lot of people that they're charging every month. The numbers are looking good. The numbers are increasing, just like on Netflix too. So this is one that a lot of people really don't understand because they think Disneyland, Disney movies. But the thing is, they now have that Disney Plus, which is a big game changer for them. And they can be easily gaining their stock in the next few years to go too. If I was buying this stock, for me to put money, they need to at least be at $150 to $155, if not lower, for me to actually take a look at the stock. Otherwise, it's just not worth it personally for me to park my money. I think I can put it better elsewhere. And the last one we have to talk about is Jumia, and it's up 25% in just one day, which was Friday, the very last trading day. And we usually don't talk about stocks that are up so much in just one day because I think, in my opinion, they can come back down. But Jumia is a great stock that definitely needs to be on your watch list because they're basically like the Amazon of Africa. And when you think of Africa, you might think of like poor people and really not making money. But Africa is so big. It's one of the biggest continents in the entire world. So in the future, it can be a really big player, just like an Amazon. In my opinion, this one can go up to $100 a share in the next few years. It's not going to go up overnight, but in my opinion, in 2-3 years, this can definitely be a $100 stock. So if you're looking for long term, buying it at market price won't hurt. But if I'm going to be buying more shares and more money into it, I'm going to at least be looking to get in at $50 to $55. And I'm not going to be touching that for 2 to 3 years. So if you're not thinking about a long-term hold on JMIA, ticker symbol, Jumia Technologies, don't even think about it. Yeah, the good thing is you can have some short-term gains on it, but the amount of gains that can happen in the future is a lot. The market cap is only $4.4 billion, and if you look at something like Amazon's market cap, it's a lot more than that. So for this market cap to be at 10 billion or 15 billion or 30 billion is very, very realistic. It's going to take some time. So this is one that you definitely want to do your own research on. If you're going to research a company, read some articles and do some research on this stock out of any on the list. That's why I saved it for the last one. For the people who watch to the end, gets the best stocks too. And I'm not saying that this is the best stock on the list, but it just might be one that you want to look into and you can potentially make a lot of money from too. So guys, that was the video. If you did enjoy, leave a thumbs up on the video. Let me know how you liked it. Let's hear it in the comment section below on what was your favorite stock on this list today too. And I did start my wait list for my close friends group. So if you do want in on that, we have some special highlights on my close friends for my close friends only. I also have my success #1, which is all my client success. Over 100 testimonies now online on my Instagram page 48,000 followers we're up to now. We're almost at that $50,000 market, and we have over 100 testimonials on my Instagram. It was actually so long, once you get to 100 highlights on one, they make you make a second one. So I made a second one here, which I'll start adding to success number 2, and that's going to be more people and more testimonials there too. So first one, you can check that out, read through them, and you can kind of get to the end. You'll get to more recent ones. And then success number 2, I'm going to start filling up next. So guys, thank you for rocking with me, and we're making money together. Let me know what you guys want to see on the next video. I will see you in the next one. Remember, don't time the market, buy the market. Peace.